Like I said, this one, we kind of jokingly called it what I wish I knew before I took my company public. But we will, try and attack some important points of the journey of an IPO and then beyond. And on this panel, we have two amazing founders, one who's already taken his company public and one who hopefully will take their company public in the next 12 months. And so maybe I'll start with you, Alok, since you've sort of crossed over to the other side. Maybe take a minute to rewind to the day you were on that stage, it was expectation building, the clock is sort of counting down, and then the magic moment happens. What was the thought that went through your mind?
Actually, there was no thought. I just got off the stage not believing that it's done. If you recollect, you were there. I didn't even look behind at what's happening on the screen. But no, it was a day of redemption as well as a feeling of responsibility, because you start to it starts to sink in what just happened, which is a large bunch of people just put their money and trust behind you. So you also walk away with gratitude and a feeling of burden on your shoulders that now you better deliver. But yeah, it was a bunch of emotions that day, and I think for any founder who spent like 18 years building towards that day, which is what we'd done, like it's a great moment. It's a moment you always remember.
I'll stay with you for a minute. When did you start building, let's call it public company muscle, right? And how long before, and what changed from that day on?
I think it starts very early. And the misconception that, IPO readiness starts 1 year, 2 years before the IPO. Whenever I meet founders talking about it, I'm like, IPO readiness starts way before, in terms of how you run the company. And I think founders, especially if you're a very hands-on founder and you're working like in founder mode, as they call it, they don't go into a mindset where you need to transition somewhere along the way to thinking of yourself as a professional manager more than just a founder. Because that's the art of letting go and understanding that you're building this company not just for yourself, but eventually, for a large number of shareholders that, in the private world could be your VCs, could be your angels or whoever they're coming in, right? So you have this burden of responsibility right from the time you take the first check, which you don't realize most of the time because you feel you're in control. But the fact is that governance and some of the things that IPO readiness talks about starts very, very early. Like I recollect, like Big Four auditors we've had since at least 2011, right? I mean, we IPO'd 2024, so like 13 years prior to our IPO, and it was by choice. It's not that we couldn't have gone with the next four, but it was by choice because you want to also sleep well at night thinking that, I am running a shop where I don't tolerate something which is not compliant. And also that zero tolerance for a miss on some deadline where something was supposed to be filed somewhere. A lot of companies tend to sideline it when they're small. I still remember that I used to give a hard time to my CA or whoever was helping us during that time, if he missed it even by a day, because that was something you felt that, should never happen. And so that discipline comes in very, very early, and you have to institutionalize that. And somewhere, I think the sense of responsibility that this company does not just belong to you. It's a mindset shift that needs to happen the day you raise your first check from somebody outside. So that doesn't change at IPO. That becomes even more compounded. But that leads to a lot of triggers which makes you behave more responsibly. So fortunately, I think, in our case, because we had a very tough time raising money in our early years, some people in the room, many people in the room I would have come to and knocked those doors and not gotten anything. I managed to knock some doors where I raised money, but I think the learning from that was that, you have to look at every penny you've raised, whether it's venture debt or whether it's equity, as a huge responsibility of delivering something on the other side, right? And sometimes it becomes very deeply personal. saying that, I better make this work because so many people's money is riding on me, right? So I think that was always there in me and Rajneesh as founders. And, we would always tell people that, look, it's not just for ourselves that we're building this company. There's a bunch of people who believe that this will work. We better not let them down. So it starts very early with that mindset, and it shows up in everything that you do.
Ashish, just coming to you, you're in Pune, away from all the hurly-burly of this city.
Or from away from Bangalore.
Yeah, or from Bangalore. Obviously, you're not watching CNBC all the time, I'm guessing. You're also running in a way, a regulated business. What is the mindset shift that you had to take on? Obviously dealing with private investors, that cadence is different. Public investors, you're also amongst the early sort of IPOs that are going to happen in the unsecured lending space, or mostly unsecured. So tell us a little bit about your mindset and how long have you been preparing for this moment?
So I'm still learning whatever Alok spoke. I'm still guessing about it. But in my case, when we raised Series D in 2022, that time at least it was clear in my mind that only way for me is to get this company IPO. Because if we are now building for 20 years, for me, so I keep saying, if somebody gives me debt, they can wake me up in the night and I'll sign the check. I'll sign the papers and they can give me the money. Equity just takes a little more time. So we are always in a constant need of capital, whether it's equity or debt. So from that perspective, if you are looking for a larger check, predictable money, IPO becomes a way to go. So from that day onwards, we started building it. And like you rightly said, we are a regulated company. I have a subsidiary NBFC. So in 2023, when we were chatting around the piece saying that we need to raise bonds, and there was a choice whether I should go for unlisted bonds or a listed bonds. And listed bonds comes with its own, without ringing the bell, you get all the compliances. So you don't have a photo with the listing, but you get all the compliances coming on your way. So we decided to go that way, saying that we want to have our bonds listed. So in a way, you have RBI sitting as a regulator. You have SEBI because you have listed bonds. And on the top, you went and take a corporate agency license, so you have IRDA also. So from that perspective, we had all the regulators from last 2-3 years, they're doing it. And many of the IPO readiness came through just because you kept on becoming larger NBFC, RBI has its own thing. Like for last 3 years, we are doing audit committees. For last 3 years, we are doing risk management committees. And those structure, when you started, you thought means the board meetings are still very, very papers, etc. But in last, as the independent directors came in, you start getting the seriousness from them, the questions coming in. So the structure started evolving. So the IPO readiness from a prospective mindset started evolving much faster. Like today, I already have 20,000 plus debt investors. So that responsibility of unknown investor investing into me is already there. Like when you invested or some VCs invested, I know I can pick a call and explain that something is off because of XYZ reasons. But today with investors, I can't do that, right? So that responsibility and awareness has already started building in last 2 years. And that's where we made the changes around how do you really build the companies around, just not from IPO perspective, compliances, from making the company ready from a management structure perspective, running the board meetings, audit committees into a structured way. How do you really write minutes? And on the top, because being regulated as it is, all those things goes through a serious rigor. Means I'm pretty sure anybody running NBFC knows how rigor it is. So from all those perspectives, the company has been there. But yes, there is a difference in debt versus equity listings. There are different compliances. There are different mindsets because the outcomes are different. So I believe that it's still a journey. It's still a learning. It's still a process which we are learning. But from a mindset perspective, we don't worry too much about the compliances which will come in or the regulations which we need to follow. It is more about what Alok was talking about, the unknown investor public money management, that responsibility once you come down from that podium just draws into you. So like when I look at my list of debt investor, that is the biggest draw which happens to me, saying that guys, means that responsibility is much more acute, let me put it that way.
That's why we love founders like you. So, look, obviously you've already taken the company public, but talk us through a little bit of those meetings that you had, where you started those conversations about how you explained the company to by the time you got to the IPO. Had the narrative changed? Had your storytelling changed? Had the metrics that public investors look at versus private investors, was that different?
Yeah, no, it's a great question. I, I think the narrative is a very important part and an underrated part of an IPO. And we realize this because we have had the fortune of, having two attempts, right? So the first attempt we filed in 2021, and I'll rewind a little bit because some of the catalysts came from Rahul. Rahul helped me do an acquisition that changed our trajectory and gave us more confidence. So I remember it was the middle of COVID, things had just opened up. And I call up Rahul and say, I want to make an acquisition. And the first reaction probably was, are you mad? This is, we're talking peak COVID, your revenue is close to zero and you want to acquire a company. But he listened to me and he listened at the rationale. He looked at the company we wanted to acquire. Both companies were profitable pre-COVID. And the trajectory was that we'll be profitable again in a few months. He took a bet when if COVID had not opened up, we were running out of cash in probably 6-8 months, maybe 9 months with zero revenue. Took a bet on us, helped us do that acquisition. We did a pre-IPO round, did another acquisition, and we filed for an IPO. All this happened in a span of probably, 7 months? And I think that moment, the confidence we had was that, look, we are coming out of COVID, our trajectory is profitable. We were the only OTA in India for sure, possibly in the world, that in a COVID year had more revenue than in a pre-COVID year. So, and was profitable in a COVID year, right? So we were like, okay, if this is what we are doing this year, next year is going to be gangbusters. Maybe we should go file an IPO and try our luck, right? And Zomato had filed already when we started working towards our filing. So we were like, Zomato will definitely do well, great company. It'll be a great time to go. So we filed in August 2021, got an approval in December. And then 2022, January onwards, we all know what happened. The market tanked. Most of the tech stocks that listed the previous year actually were trading south. Not a great environment to be in Mumbai, talking to people, trying to convince them to put money in an internet company. So fought that uphill battle in the middle of 2022. And then by the end, and though we had a few backers, which also came in 2024, because once you back an idea, if you've seen a company before and they promise you some numbers. So the advantage we got was when we made our first attempt, we met all the investors that mattered. And we, obviously in our pitches, we talked about how our growth story should look like. And then the analysts shared certain projections on what we should end up doing. We beat all those projections handsomely when we went in the second attempt 2.5 years later. Like we were literally doing almost 1.8x the EBITDA that we promised at that point, that we'll be doing 2 years down the line. So I think the advantage we got of 2 attempts was batting practice, net practice of meeting investors, getting feedback on the narrative, and getting feedback on the level of disclosure. So the narrative building for IPO needs to be simpler than what it is in the private life. So private life, you get a one-on-one meeting with people that can last even 2 hours, where you get the liberty to explain what you do in as much detail as you want. In an IPO, you're literally doing back-to-back meetings with 100 funds who have a narrow attention window of an hour, where they get to ask you, you talk for 40 minutes, for 20 minutes, they ask you 3 questions and you're done, right? So if the narrative is not sharp enough, nobody understands your story. And we were not the first online travel company people had seen or met, but we were very different. Like unlike other companies, we were focused on tier 2, 3, middle India. We had a utility first approach. We didn't start selling tickets. We still believe we are not a travel booking company, but actually we are a peace of mind company. We sell a lot of peace of mind products on top of the travel stack. You can buy tickets at many places, but you can't buy peace of mind at all OTAs. And so these sharper narratives emerged after talking to people and getting that feedback that they were not understanding deeply enough how we were different, confusing us as a train OTA, whereas the fact is anybody who takes a train eventually takes a flight in their life once they start earning money. So I think those are things that we had to sharpen our narrative around, and then we got feedback on disclosures, which we actually went back and acted upon. And I remember I met Sanjeev and TV Mohandas Pai during that period on disclosures, and I asked them, look, I'm worried if I show all these numbers, make my trip, we'll get to see them, and so that's a common worry people have, right? Competition will see what you're doing. And they were like, if they can see your numbers and do it, then you don't have a moat. And that struck me. I was like, that's true, right? Because if investors do not understand how contribution margins in every line of business are flowing, and they doubt that I don't make money on trains, I got to show them that I actually make money selling train tickets, right? So we went ahead and disclosed contribution margin on every line of business, became the first OTA in the world to actually do that. So I think it was great fortune to get these 2 attempts, although I felt very dejected the first time around when I couldn't do it. I remember I went and did Vipassana for 10 days just to get back to form. But in hindsight, it was the best thing that happened to us, right? Because it just helped build investor confidence like nothing else could have.
Amazing. We're also in the piece of...
So one thing I've
Go ahead,
already
go ahead.
decided that after listing, I'll go for Vipassana. So I'm just saying that, so looks like